What's going up, everybody? Hope everybody's having a fantastic day today. We're going to be talking about tips and tricks and some rules for day trading stocks here. All right, so the very first rule is never add to a losing trade. Now, this is pretty much just common sense. If the stocks just continue to getting crashed, you don't want to just keep buying more shares because these stocks, some could be way overextended and could be just getting slammed back down. And you just each time you buy in, you're going to be losing more money as the stocks fall. There is multiple strategies that, you can use. I've done it, but it's called averaging down. It's pretty much when you buy at, let's say you buy a stock at $10, it falls to 8, you buy more shares, now your average price is $9. It falls to 8, yeah, average price is $9. So if the stock goes up, you're in the green, everything's looking good. But if it continues to fall, your losses are going to be doubled and you're going to lose a lot of money. All right. Now this other one here is, very important, especially for new traders, and very important for not just new, but all types, experience, everything here. All right, so you never want to risk more than 1 to 2% of your trading account. Starting off, it's going to be a lot more difficult because you're going to be wanting to, really, really start getting that ball rolling, and you're just going to want to keep holding it, thinking that there's going to have some good outcomes. But realistically, if the stock falls, below that 1 or 2%, it's most likely going to fall back down. But another way to look at this, so pretty much the 1 to 2% is just managing your risk. Look at everything from 3 to 1 profit loss ratio, meaning you invest $1 to make 3. That can be spread off into different, things, but 25 cents to make 75, 25 cents to make 50, anywhere from 1 to 3, 1 to 2, you're looking very good. When you start getting into 1 to 1, and then 1 to 0.5, 1 to 10, that's when you start losing money, and it's ramped up because you're going to be risking $1 and you're going to be losing money. So pretty much, there's strategies, or pretty much if you manage your risk right, you can be wrong 33% of the time and still make money if you understand risk management. Just let that sink in, just so you guys can understand here. All right. Now this other one is a rule that I broke hundreds of times. Never trade anything that you don't 100% understand. Now, this right here could have saved me so much money, but yes, I did have some nice returns on it. During the big marijuana stock race, pretty much the big sector blew up probably a couple weeks ago. I was just buying shares of all these companies that were in the weed sector, and it just kept going up. I didn't know why. I was making all this money, so I, sold, and I was like, oh, sweet, but I did not understand it. Later, when it, started going back up, I was like, all right, I already did this. I'm not going to invest in it again. And it got slammed back down, down 15, 20%, in a single day, which is very, very, terrible if you're holding it. But, if let's say I would have invested money in that, I didn't understand what was happening. It turns out they released news. It didn't turn out for them. But yeah, so just don't invest in something you don't 100% understand. Which one? What are we on? 4? Yeah, number 4. Trade in the direction of the trend. So that's just saying here, that's pull up. This is Apple. This is the 1 year, 1 day chart. That's pull up 3 year week chart. So as you guys can see, let's say this was a daily chart, and we just had this huge increase here. These moving average lines are acting as very strong support. So pretty much what we're going to be doing here is we're not going to be wanting to short this stock. The trend is up, whether it hits the 200 moving average or which one is this? The 90. It has an upward trend. Just by judging that, you can draw a trend line. It's upward. So you don't want to short this stock. This is very, very important for day trading because you're going to be wanting to try to buy before those breakouts rather than waiting for confirmation and then buying them. So just keep that in mind. Very, very important rule. All right, so number 5, only look for low risk, high reward trades. We talked about that, 3-to-1, 2-to-1. Very, very important. You guys don't have to, worry about that. I talked to you guys about it earlier. All right, number 6, trade with a plan. Trade with a strategy. Very important. You got to create one. What I did is I picked bits and pieces from many popular traders on YouTube, and I figured out a strategy that works well for me and a couple of my members. So now we're starting to build up a new strategy out there. Very, very easy. It takes time, but that's one thing you have to do. You have to look, 4 years. If you take 4 years to learn trading, 4 years could pay off the next 40. So, kind of like college, you don't want to just invest. Doctors don't just read a book and then become brain surgeons. They take practice, time, repetition. Same thing with trading. Trading is a very lucrative career. So you take 4 years, take 2 years for the next 20 or 30 or 40 years, just so you guys can, really learn how to do it there. All right. Now, this one's kind of back on the strategy part. Trade with a methodology that fits your personality. If you're a very, very aggressive person, you're most likely going to be an aggressive trader. If you're someone who thinks long term and slow profits add up, then you're going to have a certain strategy for that. If you're someone who likes to short stocks or likes to see stocks fall, then you're going to be a short seller. So create something, work with something that fits your personality. All right, now this one's kind of off that strategy part again. Don't trade unless you have a trading plan, and that is rules, entries, exits, and risk management. Now, this is very, very important, if not the most important rule on here, because if you have a good trading plan, exit, entry, strategy, risk management, that's everything you need to understand, for trading. Obviously you have to have good stocks. That's another very important thing. But if you have those rules down to a T, trading will start to pick up for you. I can guarantee it. And then the last rule here, your risk management rules will determine your success. So risk management, very, very important. Like I said, that's why you have to understand it. Really, you have to understand risk, because every time you invest your money, whether it's investing long term or if it's day trading, you have some sort of risk. Long term is obviously less risky and less reward, but it builds up over time, where that's where people use for retirement. Well, day trading is more of a scalping stocks that move 20 or 30%, and you scalp them for 5 to 7. Those profits add up because you're buying 3,000, 2,000 shares, and 10% of $2,000 is $200. So right there, you make $200. That's what you use to pay your bills. So risk management, very important. So those are some tips, tricks, and some stuff that you guys can really, some rules for you guys for day trading. So that's it, though. I hope you guys enjoyed this video. Please sure to like, subscribe, comment if you are new. Remember to always stay happy, stay positive, and I hope everybody has a fantastic rest of the week. Take care.